Morning, everybody. That should shut off the elevator music. How's everyone doing today? Good morning, welcome, happy Monday, so on and so forth. Good to see you guys today. Jeffrey, Jay, Steve, Izzy, nice to have you guys in here. Hope you guys had a great weekend. Hope you did something that makes you smile a whole bunch. Oh, guys, here we go. Monday, November 4th. Is it just me, or when we were kids, was November 4th election day? I always thought that it was. I guess it's just the second Tuesday, or the first Tuesday of November. Different memories of that one, but, you know, I've slept a lot. You thought the second? All right. I guess that's why we're not teaching history classes or social studies classes. Guys, we're checking news each and every morning. Wake up, pour a cup of coffee, clean out the data, look at yesterday's trades, see what we did great, see what we had challenge with, and then we go to see the news before we actually start trading. Today is Monday, November 4th, and there's no high impact news today. There is nothing that says, hey, somebody might make a reaction to what's going on. Trade away if your rules are met. Guys, tomorrow, I've had a lot of people ask me what to expect. And I'm not going to lie to you, I have absolutely no idea what to expect tomorrow. But let me show you something. Tomorrow, all day, high impact. For me personally, this is a ginormous red flag. This says to me, hey, tomorrow there may be things that are unannounced that could happen at any given moment that could ruin your good time. Some of you will still choose to trade. Some of you will choose not to trade. I think tomorrow's a great day to go golf. That's going to be my plan, and I wouldn't be surprised if tomorrow was a shorter day. Every morning I do this, guys, and I just check news. I look for high impact and medium impact. I dropped a link to forexfactory.com in the room. And then I start trading once I have that awareness. And if my rules are met, I enter. I take pictures. I annotate charts. Guys, I'm already about 30 pictures deep this morning. Yesterday I woke up and I thought, man, these guys keep jumping in and losing. These guys keep jumping in and making mistakes and holding too long and don't have the right expectations. So if you scroll up in the chat box, guys, there's some pretty cool pictures that may or may not be helpful to you. I got an email asking about management, and it spurred the lesson. So you know who you are. Thank you for that. I thought it was pretty cool. It gave me the opportunity to talk a little more in depth about some of the things, the expectations, the management. And we'll talk about that today as well, guys. We will definitely look into managing trades. But before we do that, we're going to talk heavily about entering trades. My classroom is designed to build a foundation for you. My classroom is solely purposed to get you to the point to where you can understand whether or not it's time for you to take a trade, whether or not you have a statistical advantage. So for the first hour every day, for as long as I can remember and as far into the future as I can predict, we're going to talk about a high probability trade. We're going to focus on this trade because it's defined as when each indicator on every chart agrees with the rules for the trade. And typically this is when your triggers are the strongest. You've all heard that phrase, strong triggers. It's when there's no termination conditions. And guys, there's no trouble spots between your entry and your target. This is the trade that when you follow the rules, typically wins 70 to 80% of the time. That win percentage creates confidence from the memory of success. And the most important thing that this does is it just teaches you to read your indicators, guys. And I try to downplay a little bit the need to know everything. And I actually had a friend of mine who's learning the software this morning, and we're having a conversation and he's killing it, and he's talking about a conversation that he's having with his wife about, because he's saying, oh, I need to look at this and I need to look at that, and stock traders tell me that I have to know all these things, guys. and he's killing it. He's like 100% winners. He's a week into an Apex eval. And this was exactly what he posted to me. He goes, we were talking about the correlation. He was trying to create a correlation between gold and silver and something else. And I was like, man, just stop. Too many minds. Just focus on what's important. And he told me that his wife asked him, is like, how come, you know, she'll ask him a question and she'll say, hey, well, what's this mean? And he'll go, I don't know. Mark hasn't taught me that yet, so it's not important. And that's his phrase. Mark isn't bringing it up, it's not important. And she asked him, well, how can you do this and not know? And his reply was, I know, right? It's effing awesome. I don't have to know. Guys, you don't have to know what the market's going to do next. You don't have to know whether or not news is going to create a spike. You don't have to know if there's a correlation between some stock market index and the market that you're trading. The only thing that you have to do is understand a couple advantages, learn these patterns, guys, and commit to them wholeheartedly. And we're going to work on becoming chart readers so that you can do just that. And chart reading, guys, is 90% of your day. 90% of your day is getting to work and taking trades because you have these advantages. 10% of your day is wishing you had it, or is trading because you have the advantages. So 90% wishing the advantages were there. 10% when they're present, you got to get in the market and you got to get some work done, guys. And once you learn how to read your indicators, once you get good at this idea that you can look at only 2 charts and a couple of rules and understand some very vital things, guys, you're going to understand where the market is likely to continue. And this becomes your entry for the highest probability trend trade. You're going to understand where the market is likely to go. This is going to help you create targets. And you're going to understand where the market is likely to stop, guys. And these likely to stop areas, they just halt forward progress. They're what we call termination conditions. You're going to understand all these things. Good morning, Zorro. And you're going to be able to put them into play through the highest probability trend trade that we teach. And this trade only has 3 rules. There's 2 approaches to being a day trader, guys. The first one is focusing on the money that you're going to make. Focusing on the cash that's going to go into your account. Focusing on the luxuries that you're going to buy with all that money, guys. And that is rarely the most effective way. The second way people go after it is they insist that each and every time they enter the market, they have a statistical advantage that has been proven through history, that has been proven through repetition, through study. And the only way that you'll get them to enter the market, to risk any money at all, is if these advantages are true. And what happens is when you focus on the money, you'll talk yourself into bad trades. But when you focus on the process, you're dedicated to this statistical advantage. And what we're doing is we're going to learn this first set of advantages. The high probability trend trade is only 3 rules deep. Each rule creates an advantage. The first rule says that you must have strong triggers. The advantage associated with that is momentum. And that's a market that has the potential to push in the direction of the trend, guys. Then the second rule says that you can't trade into any of those termination conditions, those likely to stop areas. That's going to make sure that you have room to your profit targets. And that's going to give you what we call a clear path. These first 2 advantages, momentum and clear path, when they are present, you're going to find a lot of opportunity. When they're present, you're going to break outside of that high probability trend trade. You're going to take all sorts of different trades based off of momentum and clear path. Hey, good morning, Nanda. So I would encourage you, make sure that you're very comfortable with these 2 ideas first, that you're very comfortable with the idea that you need a market that's pushing and you need nothing there that could stop it. And rule number 3 is specific to the high probability trend trade. Rule number 3 is designed to put you into the market where the market is most likely to continue, guys. And this is unique to the high probability trend trade. There's a lot more entries out there, and I can tell you that almost all of them require momentum and a clear path. And this is just a foundational trade for you. This is your first trade to get you started, to get you reading indicators, to give you a plan that has the potential to win more than it loses. These 3 rules happen on only 2 charts. There are an infinite amount of combinations of charts that you can put together to convince yourself that now you have more of an advantage. Most humans, in my interaction with traders, can't do much beyond 2 charts anyway. Once you get beyond 2 charts, you begin to ignore one and what it's telling you, or you begin to embrace one and break your rules because of what that one extra chart says. So we're going to keep it simple and we're going to keep it focused on 2 charts. Your large chart is a very slow moving chart, and we're actually going to use the most current bar on the large chart. That first bar, the one that's bouncing up and down, it is going to define the direction of the market that you're going to follow to take that highest probability trend trade. It will define the advantage of momentum through rule number 1, and it'll let you know that you have a clear path through rule number 2. And your large chart leads the way. It's a very broad stroke of a brush, and it's really showing the overall opinion of the market. Once your first 2 rules are met, and only when it's met, because you're insisting on having these advantages, you'll turn your attention to a smaller, faster chart. The information that's happening inside of this one bar gets broken down into 20 to 30 bars on this small chart, and you will see pushes up, and you will see retracements, and you will see bounces, and you're going to use this smaller refinement chart to pinpoint precisely where the market is most likely to continue. This becomes your entry for the highest probability trend trade. By using the refinement chart, you're going to be able to reduce risk. You're going to be able to increase your profit potential. And this is where rule number 3 comes in. And rule number 3 is specific to the highest probability trend trade. We use the 2 charts because I want you to think about it. Who am I trading against, or who am I trading with, guys? Your large chart is the large crowd. These are the men and women with more money than us, more influence than us. These are the people that if they wake up with a wild hair and they're like, you know what, let's make the market go up today. The market is going to go up. These people establish trends. They create these trends. They also produce the momentum that we use as an advantage. And then finally, they react to key areas. They make decisions right at these lines that you know about on your large chart, guys. So the large crowd is this giant surge in one direction, and we're going to ride that wave. There is a small crowd. These people, this is a small chart. These guys and gals still have way more money and influence than you. Guys, your 2, 3, 5, 10 contracts will never affect the market. These are the people that fight everything that the large crowd says. And they fail typically 70 to 80% of the time, whether intentional or just because they're overwhelmed. But what happens is your small crowd creates these little shoves, these little pushes down or up against the large crowd. You'll be able to use rule number 3 on that smaller, faster chart to pinpoint exactly where their failure is imminent, right where the market is most likely to continue with the trend. And this is how we're able to have such low risk entries. And this is how we're able to have so much room back to our profit targets by using this refinement chart. So we're going to take the first hour of today and we're going to learn the trigger line and Fibonacci rules for when it's okay to trade. We're going to focus on the rules for the highest probability trend trade. We're going to keep it very, very simple, guys. When it says okay to trade, this is kind of a little catchphrase reminding you that one of your avenues to success is to be willing to do nothing when these advantages aren't present. To be willing to sit still, to not enter the market, to sit on your hands, to walk away if you don't have momentum and a clear path. So I want you to simulate and practice, work on that patience. But the first step in becoming a confident trader ASAP, guys, is posting those trades that you're simulating in class. Every trade that you take, not just the winners, guys. I'm old and crotchety. I'm not impressed by your winners. I'm impressed by your rules following. So I want you to post in the room, and every time you do, what I really want you to do is I want you to say, hey, Mark, here's that momentum that we talked about in class, and draw an arrow to it. And there's that clear path that we're insisting on to have the highest chance of success, and draw an arrow to it. Tell me where you got in. Show me where you got out, guys. And if you do this every trade, my promise to you is that I'm going to start to recognize patterns in you. You're going to recognize patterns that are bringing you success. I'm going to recognize patterns in you that may be hindering that success. And that's one of the most valuable things about posting in this room is the feedback that you receive 15 hours live every week, guys, is going to identify what you're doing right and what you're doing wrong. And because I've done everything wrong at least 1,000 times, I'm going to work with you and we're going to develop a plan to fix any mistakes that you may be having or give you some insight on reading your indicators to do things better. So simplify. Keep it very basic. Get very good at one trade first. The same email that I had that spurred the lesson on those trigger lines also showed me that when you try to take two trades, each trade has a different entry rule, and that's okay. You've got to learn those rules. But every different trade has a different management plan, and if you're uncomfortable or not confident in the management plan for each trade, what happens is you begin to combine them. Maybe leaving just extraordinary risk on trades, or maybe cutting yourself short too soon. So guys, we're going to simplify and we're going to focus on this highest probability trend trade. You're going to focus on the looks that you'll commit to, momentum, clear path, and entry. And you've got to learn these looks so they become easy. And this little third section here is where the spreadsheet comes in, guys, because repetition creates recognition. So I'm going to give you a spreadsheet. Nexgen gave it to you when you downloaded the software. And guys, this is a lot of pain in the ass work, right? Nobody wants to do this. Mark, I bought software. I want to be rich. I didn't want to have to work for it. Well, I'm telling you right now, work through that. Your first tab is your trade journal. And your trade journal is just a way for you to keep track of what you're doing. Every picture that you take, that you annotate, that you talk about those advantages, every trade goes into this trade journal. And you're going to use this each and every morning, guys. There's a section for your pictures, what type of trade it was, the advantages, and I only put the first two advantages there because I think these are the two that carry traders. Did you win or lose? Guys, if you're on simulator, who cares? You're learning lessons. I've probably taken $50,000 worth of losses in the last, 30 days on simulators. I'm learning something new. That's the beauty of simulators. It's this giant safety net. You can't get hurt. And then there's a section for the feedback from class, guys. And this is, I think, where you guys take big strides. When you take a trade and you think it was perfect, you present it in the room and I'm like, hey, let's talk about this termination condition that you traded into. Or let me show you this look on momentum and how it compares to the lesson that I teach every morning. You were hoping a market went up when you really didn't have that advantage in place, guys. And this feedback is going to become huge for you, I think. And then the second tab is how to study this spreadsheet, guys. So every morning, go back and look at what you did yesterday. Or if you're an overachiever like me, I spent 3 hours yesterday looking at probably 1,000 pictures, looking for common threads, for correlations between wins and losses, patterns that were helping me, that were affecting me. And I was just essentially asking myself what worked and what didn't work. What felt easy and kept me relaxed, and what felt forced and made me nervous, guys. And if you do this every morning, and I'm telling you, this will take 3 to 4 minutes of your day. If you do this every morning, you're going to start the day focused on advantages, but you're also going to start the day focused on avoiding the things that are robbing you of success. And this little study is going to set you up, and it will accelerate the learning. The third tab, you've got to learn the look. So the third tab is the high probability trend trade rules. All in green, strong triggers, clear path entry. Exactly what it looks like to have your rules met, so you know the pattern, so that you can identify it when the market is moving, so you can take advantage. And then the red section is what it looks like to not have the rules met, for that advantage to be gone. And if you're looking at a chart and it looks like one of the red sections, you're going to start incorporating a little bit of hope rather than advantage. The client trade section is nearly 400 pictures of you guys doing great things with the software. This is a great study guide just to start putting things to memory. There's the high probability trend trade, the entry sequence for both long and short. There's a very mechanical, basic, emotionless plan for the brand new user. This plan is going to be in the plan that I give you in a little bit. But remember, we're building a foundation, so even the most mechanical management plan is going to grow as you take pictures and annotate charts, you're going to see ways to make more money. You're going to see ways to not lose money. And the same thing is true with entries. And then finally, once you're a chart reader, you're going to see patterns. You're going to see the same thing happening every day. And some of these you're going to be able to capitalize and you may adjust your trading plan. And some of them become these giant red flags where you're like, whoa, I've seen this. And I keep getting slaughtered every time I trade into it. Let me note that. Let me write it down. Let me commit it to memory. And that's what the favorite look section is, guys. This is just where you guys take all the pictures right on the charts and make it look like the one that I set up for you. So we're going to learn the rules. You guys are going to simulate. You're going to practice. So many people want to go live. Mark, it's not the same. If I don't go live, I don't feel the pressure. To which I lovingly and respectfully reply, bullshit. Every one of you puckers in sim, right? And if you're still puckering in sim, it's going to be difficult. It's going to be difficult to not have that same behavior live. Guys, build your muscle memory in simulator. It is a zero risk scenario. I'm going to give you a plan, rock solid plan for the high probability trend trade. It will be designed to optimize your chances of success with it. And then I'm going to incorporate into that plan, the second page will be what we call a medium probability trade. And a medium probability trade is similar to a high probability trade, except a small issue exists. Most of your indicators line up, but there's going to be an issue, guys. Your ability to read charts will define that issue. And this is going to be the vast majority of your trades. And when you're executing medium probability trades, you're going to take them and you're going to manage them assertively. Your ability to read your indicators will allow you to manage assertively. If there's trouble in your way, here we go. Your ability to read your indicators is going to identify it. And you may take a portion of the position off at that trouble spot. Guys, you can reduce risk. Get to break even. It's a medium probability scenario. But it's going to be everything you learn in the high probability trade that sets you up to take these trades. And I'm going to go to this. I don't usually go below the third section because we're really focused in class. Guys, after class, you can do market replay. You can go fix mistakes. You can double your repetitions. Market replay is this amazing tool in NinjaTrader where you can replay the day as though it were live. You can hit pause and make sure that your rules are met. You can practice management scenarios. You can practice entry scenarios. Guys, if you're curious about a market and how it moves, you can go market replay it and see if it's a market that you want to trade. So often people don't do this, guys. And I'm going to tell you right now, and this comes from experience, one of the things that I've realized is that I can't make you do the work. I can't make you study. I can't make you look for these patterns. I can't make you participate in class. I've found my peace with that. But what I can tell you is the people that do study, the people that do take pictures, that do present in class, these are the people that are dropping in to say hi and show me how successful they are. As opposed to the people that keep returning to class wondering what the hell they're doing wrong. And guys, typically, is just you're overthinking it. You're not keeping it simple. So we're going to keep it very, very simple. And we're going to look at these three rules. We're going to break them down individually. And by the end of this first hour, hour and a half, my promise to you is that you will have every tool that you need to be successful with the software. You won't have every tool that you need to take every type of trade ever known to man, but you'll have exactly what you need to have a solid trading plan and the ability to execute it. And then it'll just be repetition that makes it comfortable. So, rule number one, guys, strong trigger lines on the large chart, giving us the advantage of momentum. Strong trigger lines allow us to trade with the trend. And the trend is defined by the background color. I'm talking with my hands so much, I wish you guys could see it. I'm like an old Italian grandma right now. If the background is green, guys, the market's going up. The easiest thing to do is to look for rules to be met for high probability trend trades long. Go with the flow. If the background is red, the trend is down. Easiest is looking for rules to be met for high probability trend trade short. Guys, go with the trend. Let them establish it. Let's find a way to get in with it, guys. The only way that you can have strong trigger lines on your large chart is if both the small triggers and the large triggers are the exact same color as the background, guys. Because when the small triggers break above the large, that's what creates the green background. And the only way to have strong triggers up is if the small are literally above the large triggers. and they need to be green, and they need to be wide in the direction of the trend, guys. And the space created between the small and the large lets me know that the odds are favorable for the market to continue up. Odds favorable momentum, OFM. You're going to hear it in this classroom all day long, guys. In the downtrend, it's the exact same thing. The small triggers break below the large triggers. Even if the large triggers are green, it's going to paint the background red. I don't have strong triggers until not only are the small below the large, but the large are also red, wide, angled in the direction of the trend. The space in between small and large triggers lets me know that the odds are favorable for the market to continue down. Odds favorable momentum, guys. This should be your battle cry. Odds favorable momentum pushes a market in the direction of the trend. Odds favorable momentum gives us the potential to break those key areas on our large chart. Those same areas that the large crowd are reacting to, momentum has the potential to break them. Momentum covers a lot of mistakes that we tend to make as new users. And when I have strong triggers up or strong triggers down, guys, you're going to buy or sell Fibonacci support and resistance on those smaller, faster charts, that refinement chart. Your large chart is a one-bar scenario, and it looks like it grew a tail. You're going to use a refinement chart to pinpoint precisely where that tail is most likely to form, whether it's a long trade or a short trade. And you're going to use this idea that when you have momentum and a clear path on your large chart, you can circle these tails and look for entries. And this is going to become a study tool for you to develop a little bit of trust in the software. And I'm telling you, strong triggers are about the easiest lesson you're ever going to get. Whoa! That's what happens if you don't set up your charts right coming into Sunday. I'm going to reload my historical data real quick. And I want you to see how easy it is to identify strong triggers. Separation between the small and large means strength. Strength pushes the market up. Separation between the small and large means strength. Strength pushes the market down. It pushes it up. This is one of those times where my background is green, but my small triggers are red. My large triggers are red. My colors don't match. And guys, I have zero momentum one way or the other. I don't have the rules met for strong triggers on a small or in a downtrend or an uptrend. Can you guys give me a why if you see that? Strength pushed the market all the way down. And now we're in this transition. Guys, this is where the buyers and sellers are fighting. It's no coincidence that it's in between two lines. This is your big red flag that says sit on your hands and do nothing. You don't have the advantage of momentum. So momentum leads the way. And once you have it, you're going to look for termination conditions. You're going to look for areas that have the potential to stop the market. I hate to give you a spoiler, but these lines on a large chart, all these places where the market bounced, can stop the market, guys. Termination conditions are Fibonacci-based indicators that may reverse the market, that may create an untradeable bounce, that could create a fight between buyers and sellers. And they're nothing more than the horizontal lines on your large chart. These are the areas where the large crowd makes decisions, guys. It's not a bad idea to be able to define them. You don't have to know how they're formed, but understand that a magenta high line, that magenta line that prints off a pivot that lets us know there was a loss of momentum, this is a line that could stop the market. The divergence low line, again, this is a line that could stop the market. Fibonacci resistance, Fibonacci support, yellow 1-to-1s. All of these horizontal lines on your large chart have the potential to be termination conditions because each and every one of these lines is where that large crowd may make a decision. Buyers may enter, sellers may exit. There may be a fight, guys, and you'll never, ever, ever know what the reaction's going to be, but you can use those T3 trigger lines to take an educated guess, guys, to recognize a pattern that has been proven to lose more than it wins, which is why we don't trade into termination conditions. So it's a two-step process. The first thing, let price reach resistance. Whether it is a red Fibonacci resistance line, whether it is a magenta divergence line, or whether it is yellow 1-to-1s, excuse me, when price reaches this area, man, I'm dying here. When price reaches this area, decisions might be made. I want you to ask yourself, Where are my trigger lines? If your trigger lines remain below resistance, guys, this is a termination condition. This is an area that may reverse the market. This is an area that could create an untradeable bounce. This is an area where fights may happen between buyers and sellers. The only thing that you have to do is say to yourself, price reached the area, triggers are below, rule 2 is not met, I don't have a clear path, no trades into the area. And guys, if this area creates a full reversal, makes those large triggers go from green to red, and sets you up for a trade the other direction, guys, this is a strong top, and a strong top is the precursor to the highest probability trend trades you can take. A strong top is a precursor to most of your medium probability trades, and a strong top sets you up for momentum trades. It sets you up for HVA trades, guys. So you're going to take this lesson and you're going to take it with you for the rest of your life. And then if the market does reverse and the momentum is there and everything is screaming down, whether you found an entry or not, when price reaches Fibonacci support, whether it's support, a divergence low, yellow 1-to-1s, the only thing that you have to do is ask yourself, where are my triggers? And guys, if your triggers remain above support, this is an area that may stop the market, may create an untradeable bounce. This is an area that could reverse it completely, creating a strong bottom. All you have to say is, whoa, rule number 2 is not met, no trades into that area. This rule came to be because when price reaches an area and the triggers don't break, more often than not, it stops the market or creates an untradeable bounce. More often than not, it pulls money from your pocket. So you can make the choice to never trade into it. You can wait for it to break. You can wait for it to roll. And guys, areas break a lot. And they break when both the small triggers and the large triggers clear the area. So if price reaches support and the triggers remain above, I'm obligated by my plan, by my rules, to do absolutely nothing and wait and see what the reaction is. If both my small triggers and my large triggers get south of support, support is broken, guys. It's behaving as resistance now and my path is clear until I reach the next area. It has nothing to do with ticks, big dog. It has everything to do with triggers. It has nothing to do with ticks. Has everything to do with triggers. If price reaches the area, the triggers remain below or above, it's a termination. The area is not clear until both the small triggers and the large triggers get to the other side of the line. Does that make sense? Has nothing to do with ticks, has nothing to do with the color of lines. Absolutely. Has everything to do with trigger location. Guys, this is the best of the best scenario. Waiting for the area to clear. And if it clears, we're going to look for our rules to be met all the way until we hit the next line, and then we're going to go through that process again. Right here is where price hit resistance, and the triggers are just way below. And there's just, rule number 2 says don't trade long into it. Don't take that trade. You don't know what's going to happen. And guys, it takes a lot of patience because it's like 13 or 14 bars until the small and large triggers break above. And then the path is clear. When the trigger's clear, not the price bars, not the ticks. And that path remains clear until you reach the next area. So if we go back to that live market again, let's see if we can find an example of areas breaking. Look at this. Termination condition reverses the market. Momentum pushes through areas. Once the small and the large get below support, this area is considered broken. Does that make sense? Termination, clear path. Termination, termination, termination. Weak triggers, reversal, straight to a termination, right to a termination, back to a termination, retraces to a termination. Hits the area, even with momentum, bounces straight to a termination. And guys, we're now back at Fibonacci support, and none of the triggers are broken. We're into a termination. And you're like, well, shoot, Mark, how am I ever going to make money? Well, we're going to incorporate that second trade, that medium probability trade. Because once you understand terminations, once you believe that it's the trigger lines that tell you whether or not an area is broken, you're going to begin to see this look right here, guys. Because momentum can break areas, your trigger lines will show you that potential to break. So every area that's on its way to being broken is going to look like this, guys. When the smalls break through the area, smash through the area, and the momentum is the absolute strongest, but the large are still trailing behind, guys, this is what we call a 50-50 look. This 50-50 look says that momentum has the potential to break the area, but it's not broken yet. It won't be broken until the large triggers get below. You'll be able to take trades based on that potential, but you have to understand it's not a high probability trend trade, because a medium probability trade means most of your indicators line up for a trade. Excuse me. However, a small issue exists. Your small issue is going to be that you don't have a clear path. So you may have to manage aggressively. You may have to take quick profits. You may have to manage out of the trades if that trade doesn't actually break the area. This will be your second trade. I will give you the best of the best plan to capitalize on this look. But it's going to be important that you recognize termination conditions first. It's going to be important that you understand that this was nothing more than the potential, and there's a very specific look for breaking, guys. And there will be times when your path is not clear. There will be times when areas are stacked against you. It may be 2 or 3 support levels. It may be 2 or 3 resistance levels. That's okay. This is 90% of your day, guys. The futures markets trade $220 billion an hour is the figure. $220 billion an hour. It's not necessary for you to be in every move. You don't ever have to be the first person in the market. You don't ever have to be the last person out of the market, guys. With this much movement, with this much volume, with this much potential, what you're going to find is that it won't be difficult to capture $400 or $500 each day if you're waiting for these advantages. And very often, what happens is Fibonacci gives you the ability to see where the driving forces of the market are likely to make decisions. With a little bit of study, you'll begin to trust this. Rule number 2 can keep you out of consolidation and chop. 90% of your day is spent waiting for advantages. 10% you'll be trading based on those advantages, guys. Rule number 2 lets you see precisely where the large crowd may react. And I want you to see just how effective this is. That's Fibonacci support to the tick, even with odds favorable momentum. And look at what the market did. And then when you reached Fibonacci resistance, nothing smashed through. Your large triggers eked through, but your large triggers never made it. And that pushed you right back to support. And when you got to support, it retraced right back to the fib. And then it continues straight to support and back to the fib. And guys, they appear to be continuing this look down. And all we have to do is wait for that clear path, guys. 90% of your day is doing nothing. There is nothing more traumatic than going back and looking at your day and realizing that most of your losses were what I call avoidable losses. Trading into areas, trading without momentum, guys. And you'll learn to trust these rules enough to where you simply say, it's not my trade. This isn't where I want to get in, and this isn't where I want to be, so I'll just wait until that large crowd puts me in the right position, guys. And doing nothing costs nothing. So when you have momentum, and guys, do me a favor, give me a Y. Is everybody good? The separation of the triggers means strength. Give me a Y for that one if you're comfortable. And then if you reach an area and the triggers don't break, it's all right to sit on your hands and do nothing. Guys, there's more coming. You have momentum and a clear path when these rules are true. You have the best of the best. You have the foundation to create a consistent rock star trading plan. We're going to look for the entry on the high probability trend trade first. That's what we're learning. And this entry happens on that smaller chart, that faster chart. And guys, that faster chart will show you change that you can't see on a larger chart. So if I go to look for my entry and I see 3 divergences, 3 losses of momentum in the same price range, I have to pump the brakes. This is the only termination condition that will keep me out of a trade if I have momentum and a clear path. This is the only time I will refuse to enter a short position is if I see 3 losses of momentum in the same price range. A lot of times this happens inside of that one bar. So it's kind of showing you the change that the large chart won't show you. So 3 cyan lines from a low, 3 magenta from a high is the only time when I have momentum and a clear path that I'll stop my search for an entry area, guys. That's the final termination condition. But if it's not there, we're going to pull out the precision. We're going to show off a little bit. We're going to use a limit order to buy or sell a pullback. That's that shove that the small crowd creates. And we're going to do it at an area. Fibs, mid-bands, and yellow 1-to-1s. That's it. Fibs, mid-bands, and yellow 1-to-1s. And we're going to insist that they are inside of trigger lines. More importantly, we're going to insist that they're inside of what we call favorable large trigger lines. Why? Because price returns to triggers. Price loves to come back to the triggers. Guys, check out this large chart. You ready? Price breaks away from the triggers and it comes back to the triggers. And it breaks away from the triggers and it comes back to the triggers. And it breaks away from the triggers and I'll be darned, it comes back to the triggers, guys. You can almost guarantee that it's going to return to those triggers at some point, whether it's a large chart or a small chart. So Nexgen put the large chart large triggers on the small chart. And what happens is every time the market pulls away, you look for an entry, you can say, well, price is likely to return to those triggers. Large on the small chart, synthetic on the small chart. And it creates this zone where price may return. We're going to take it a step further, and we're going to give it something to bounce off of inside of that zone. We're going to give it fibs, mid-bands, and yellow 1-to-1s right at the point where the market is most likely to correct. Guys, the idea that price returns to triggers is going to help you with your management plan as well. It's going to help you with your patience. So if I'm looking for an entry, my rules are met, I go to my small chart, and I say, I want to get into this market. I'm going to say to myself, price may return to the large triggers. And I've got a fib and yellow 1-to-1s, and those may create a bounce. And price may return to the synthetic triggers. I don't know which one, but I've got a mid-band in there that may create a bounce. So guys, I'm going to create this window, this zone of areas inside of those triggers, and this becomes the point where the market is most likely to continue. And all we have talked about for the last 30 minutes is how to identify an entry, how to pick the right spot to place that limit order. So when everything is going up on the large chart, when the momentum is present on the large chart, when the path is clear on the large chart, notice that I keep saying on the large chart, I'm going to turn my attention to the smaller, to the faster chart. And guys, it's going to be trading all the way up here, away from those triggers, away from those areas. Your job is to be patient, to wait, to understand that this is a pattern that repeats itself. This reversal bar, this down bar, after all of those up bars, when everything's going, when your fear of missing out is full throttle, this down bar says the fight is on. So you're going to look for those favorable large triggers. And you're going to say to yourself, all right, with these favorable large triggers, I know precisely where the market is likely to return. And then you're going to remind yourself, but I need something solid inside of there. I need something for the market to bounce off of. So you're going to look for fibs, mid-bands, and yellow 1-to-1s. And you're going to create a window of opportunity. That just feels good, right? A window of opportunity will extend from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. And that blue shaded box represents the point where the market is most likely to bounce and continue with the trend. That blue shaded box represents the point where the small crowd is most likely to fail. Your limit order goes a couple ticks above the highest point of support. And at this point, you have done everything that you can do. You've insisted on momentum, you've got that clear path, you've defined your area, and now you're just waiting for that small crowd to get to you. And if they do, you're in a long trade. When you're looking for this window, any fib, mid-band, or yellow 1-to-1 on the wrong side of the triggers, below the triggers, beyond the correction point, guys, this is outside of the window of opportunity. And this is actually where the market shouldn't go if this is going to be one of those 70 to 80%. You're going to use this idea where the market is most likely to continue to define where it shouldn't go, and this is going to be part of your management plan. In a short trade, large charts down, large chart momentum is strong. There's absolutely nothing in the way. And you're going to be fearful that it's going without you, that you're never going to get paid. And then the small crowd's going to show up and they're going to give you that reversal bar. And guys, this reversal bar is not your entry. This reversal bar tells you to look for the triggers. Are they wide? Are they one on top of the other? It should look like two snakes riding piggyback. Because that's the point where the market is most likely to correct. And you're going to remind yourself that trigger lines aren't an entry point, but rather I need an area inside of triggers. I need fibs, mid-bands, or yellow one-to-ones. Because that represents the point where the market is most likely to bounce, where it's most likely to continue, where the small crowd is most likely to fail. And you're going to say to yourself, all of these lines on the wrong side of those triggers have nothing to do with this equation. That's exactly where the market shouldn't go. I don't want the market up there. I'm hoping for the bounce, and I'm going to put my limit order 2 ticks below, and we'll just see what happens. I'll never be in control of that. For you guys that love to jump into the market, I'm going to tell you something. You jump inners. Man, it's going, it's flying, life is good. I'm going to jump in right here and hope momentum carries me. A reversal bar, a close on the wrong side of triggers is a loss of momentum. Guys, this is where retracements happen. You guys that just jump in need to start paying attention to these. Scroll up to the top of the chat box. I put in a great lesson yesterday. If we have time, we'll cover it today. Once you define where the market is most likely to continue, you understand where it shouldn't go. Once you can define where it shouldn't go, that's where your first stop placement goes, guys. Your initial stop will be placed 4 or 5 ticks above the trigger lines, above that correction point for a short trade, 4 or 5 ticks below for a long trade. And you're going to say to yourself, I will not exit this trade unless those mother scratchers can push through and get me. Guys, don't give yourself up by putting stops inside of that window of opportunity. Don't give yourself up by putting your stops inside of those triggers. 4 to 5 ticks beyond. This is where the market shouldn't go. And guys, every 10 trades you take, 2 to 3 of them are going to hit that stop, and you have to learn to be okay with it. You have to get good with the idea that you can take the perfect trade and it's not going to work. And I even did some research over the weekend for you guys. Will I lose perfect trades that fit all the rules? I gave them 3 chances. Magic 8 Ball says, as I see it. Magic 8 Ball says, without a doubt. Magic 8 Ball even said, you may rely on it. 3 in a row, guys. Telling you, I'm not a superstitious guy, but I'm kind of stitious. And when the Magic 8 Ball says it's most likely to happen, what a great place to put your stop. Take those small losses. But if you get a reversal bar in the direction of your trade, if you get that confirmation bar, guys, you can put your stop 2 ticks above it in a short, 2 ticks below. And it's really not uncommon to see you guys take these beautiful entries, these high probability entries, get a reversal bar, move your stop, and lose $30 or $40 instead of giving up $400 to $500, hoping it doesn't go. Hoping it doesn't push beyond, hoping that it magically reverses from the middle of nowhere where the market shouldn't go, guys. And this stop placement is one of the reasons that you can take these trades, that you can win 30, 50, 60% of your trades and still come out positive because management allows you to do that. And guys, this is the high probability trend trade. This is what we talk about every day. You've got to study it. You've got to get to a point to where you recognize these patterns so that it becomes easy. You've got to learn how to identify momentum in the moment. Do I have it? Do I not? And if you do, you've got to understand that clear path. And if you have it, you're going to look for the area inside of favorable large triggers, guys. That's your plan in the very beginning. And I'm going to give you a written out plan with a bunch of pictures for it. You can use these tails on the large chart, guys. Your entry comes from the small chart. But I want you to see something. The top of this bar that's only 8 ticks from trouble is the beginning of the reversal. And the bottom of this bar, this tail, is the area inside of favorable large triggers. And because you wait for the pullback to the area inside of favorable large triggers, that 8 ticks turns into 35 ticks. That $80 turns into $350. If you jump in early, afraid that the market's going to go without you guys, your stop still goes below the triggers. If you jump in late, it's still behind the reversal bar. These entries, learning to trust them, proving them, is going to reduce your risk and maximize your profit potential. And that's what we talk about every day, the high probability trend trade. So how do you get good at it? Whoops, wrong screen. In order to get to where you want to be, you've got to recognize some looks and patterns quickly. It's really that simple, guys. This will reinforce the lessons. This will speed up the process of becoming a chart reader. And once you're a chart reader, you're going to understand when it's time to pull the trigger. So I'm going to encourage you guys. I can't make you, can't force you. But I would say if you're serious, right? If this isn't just some fleeting moment that you're hoping to magically be wonderful at, go take 25 pictures of strong triggers and go take 25 pictures of weak triggers and know the difference between the two. Go take 25 pictures of a clear path and 25 pictures of termination conditions. Know the difference between the two because that's going to open the doors for that next medium probability trade. Define your entries and know what it looks like to take the perfect entry, guys. But don't just take the pictures. Annotate the charts with the whys. Why are the triggers strong? Describe it. What's the advantage? Why is it a termination condition? Describe the formula. What's the disadvantage? And guys, if you do this for each individual picture, the time that you spend typing, analyzing, and posting into your spreadsheet, it's going to reinforce not only the looks, but the advantages that coincide with those looks. You're burning this image into your mind of exactly what it looks like, and you're supporting that image with the verbiage that makes you know that you have those advantages. And ultimately, you're going to piece these together and create the trade. That's where the 101, guys. And I'm telling you, I probably throw more love than I should. But you've got pretty much the assignment done here. Your job is to double it. Your job is to take these pictures and to make sure that you don't just take them, but rather you take the time to talk about why. Strong triggers, small, large, and large up, and wide space between the two. Odds favorable, rule one met. Guys, you're never going to mess it up. You're never going to say, well, that was strong triggers, or this was strong triggers. You're going to say to yourself, this is exactly what it looks like. This is what I need. You'll do the same thing with termination conditions, guys. And I'm telling you, this is the quickest way to get to where you want to be. As you take those pictures, I give you the high probability trend trade checklist, guys. Each rule broken down with a picture, a checklist to enter, guys. And the first picture is that strong top or bottom, and it's not mandatory. You don't have to have a strong top or bottom, but it adds a little something to the trade. It increases the likelihood of success. There's momentum, and then there's the loss of momentum, guys. You should never make the mistake between the two. Termination, potential to break and broken, and the same thing with the window of opportunity, those areas for entry, guys. And then the second page, print this one out, put it on your desktop, print 10 of them out. Somebody in here printed one out and laminated it and just got a dry erase marker, I said that. And every time they look for one of those trades, they're following this rule. And guys, when you add in the 50-50 trade, you can put the checklist below the trend trade. Have a 50-50 checklist. Have an HVA checklist. Create your trading plan in workable checklists. That was you, Jay. I love it. Guys, this is assuring yourself that you're following rules, that you have a statistical advantage. And I've never had anybody follow this and do worse than 70%. And very often I get experienced traders back in this room and they say that magical phrase to me, hey Mark, I went back to basics and now I'm successful again. Hey Mark, I stopped chasing every trade and now I'm finding success. I quit hoping for every move. I'm only taking the best moves, and I'll be damned, Mark, I can't seem to lose. It's aggravating. And you will lose. Everybody loses. But this checklist will help keep you on the right side of everything. And that takes us to the favorite thing that I've ever created, guys, the KISS plan. The Keep It Simple Sunshine Plan. These are the basics that experienced users tend to come back to get back in the habit of winning. Guys, this is a plan that I've had people follow in their first 30 days with Nexgen and get funded in those prop firm accounts. I've had people do upwards of 85% winners just with this one stupid simple plan, right? The one that forces you to be patient. This KISS plan is a stepping stone in your learning journey. And the one thing I try to be very clear about every day, is that the high probability trend trade is not your only trade, guys. It's just your first trade. It's a trade that typically wins 70 to 80% of the time. It's a trade that creates confidence through the memory of success. And guys, this is a trade that teaches you to read your indicators. And then through simulation, study, class feedback, and continuous practice, you're going to be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators, guys. When you can read your charts, you're going to see things. You're going to begin to recognize patterns. You're going to identify patterns. You're going to look for ways to hold for bigger moves, longer moves, different entries, guys. Once you're a chart reader, you'll be floored at what you recognize. But until you get to that point, your simplest plan for consistency, the one that's been proven, tested. Never fight the large chart. That's the easiest way to avoid the most common mistakes. Don't fight the trigger lines on the large chart. Don't trade indetermination conditions on the large chart. Just go with the flow. Let it lead the way. Guys, if you can do that, you're going to eliminate half the losers that most new users have. Yeah, we're all old guys, and sometimes we drag along, and sometimes we have great weeks, and sometimes we have challenging weeks. And that's just a part of life, right? Guys, define your entry. That's all we've done for an hour. Define your entry. Pinpoint where the market is most likely to continue. Get in at that spot. Learn to trust that spot, because once you're in the market where the market is most likely to continue, guys, you understand where the market shouldn't go, right? Once you're in where it's most likely to continue, you know exactly where the market shouldn't go. It shouldn't go beyond those triggers, the wrong side of the triggers, 4 to 5 ticks. And this is where your initial stop is. And I want to go back here because we were very mechanical on our entry. We're going to be equally mechanical on management in the KISS plan, guys. It's going to be 100% if then. If this happens, then I do that. If I enter the market where the market is most likely to continue, then my stop goes where the market should not, 4 to 5 ticks above those trigger lines. And if the market does not stop me out for a loser, like it will 20 to 30% of the time, then I will move my stop 2 ticks above that reversal bar. I will minimize my risk. And I will say that if the small crowd finds a second win and gets me, that's cool. It's a small loser. It's a cost of doing business. Losses are a normal part of a positive equity curve. If they don't hit my stop, well then they're going to hit my first target. The KISS plan is designed to get you guys paid. The KISS plan is designed to get you accustomed to exiting the market instead of hoping for home runs every time you take a trade. And if it hits your first target, it's only $100 in the distance. And that's $100 that goes into your account. And someone said this in the room, and I like to repeat it. Nobody in this room would ever step over a $100 bill on the sidewalk. Nobody would say, that's not enough money. You'd be stoked. You might even supersize at McDonald's that day, guys. This $100 builds confidence. This $100 dries up your sweaty palms. This $100 gets rid of the butterflies in your stomach. And guys, you're going to move your stop to break even. If it hits my first target, then I will move my stop to break even. And there's nothing for you to do. You're either going to get stopped out break even, or it will go to your second target. Once again, the KISS plan is designed to get you comfortable with the idea that getting paid is the goal. And your second target is $200 away from your entry, guys. And if you win, if you hit that second target, you're out of your position. No matter what happens next, you're done. That's it. No more. But check it out. You will craft a plan tailored to your personal goals based on your experience reading the indicators. And you're going to get this idea through study, simulation, feedback, when you have the potential to hold for bigger moves. When your large chart indicators tell you, not when your gut's wishing, but when your large chart says, hey, look, you have momentum. There's absolutely nothing in the way. This is one of those times when on a trend trade, it makes sense to let that last one run out. So that is the KISS plan. And then the KISS plan, once you're comfortable with this, once you've gotten a little comfortable with moving stops and all that good stuff, guys, it sets you up for that second trade, that medium probability trade, that 50-50 trade. And it's right here on the plan. But before we do that, I want to show you what $300 a day means to you. $300 a day, if that's the best you do. 3 break-even trades, 75 grand. 75 grand a year. $400 a day, $200 per contract puts you in 6 figures. Everybody wants to make all of the money. Guys, learn how to make some of the money. Once you learn how to make your money, the rest of the money tends to follow. But as soon as you start telling yourself, I have to make that $1,000, guys, you start holding trades longer than you should hold them. You start moving stops before you should move them. And I want you to see on this picture, and this is one of the things I think I need to just really turn this into a picture. So let's draw, because it's Monday and tomorrow's election day. Guys, if your stop was right here and you moved it before your $100 target, you could have been stopped out, and then the market just went exactly where it went. This is a tiny chart. And if you took your first target and instead of going break even, you tightened up right behind it, you probably got stopped out before you hit your second target. Guys, you're learning to trust the large chart right now. These tiny little fluctuations on a smaller, faster chart will give you heartburn. They will freak you out if you pay attention to them all day long. So focus on getting paid, guys. And once you're good at getting paid, you'll find a way to get paid more. Everybody does. Once you understand the elements of the high probability trend trade, you're going to be a chart reader. And once you're a chart reader, guys, you're going to find more trades. I'm going to give you a plan for that 50-50 trade, that potential to break trade, that, hey, this isn't a clear path trade. And this plan is designed to optimize your chances of success with the 50-50. Guys, this is not the only way to take this trade. This is the trade that when you follow these rules, it wins more than if you break them. I'm not going to say more than it loses, more than if you break them, because guys, it's just a medium probability trade. You're going to use your chart reading to recognize that disadvantage. You're going to use your chart reading to manage this one aggressively. But once you study it, you get some feedback, a little continuous practice, you might change the plan. Initially, let it be one area that's not broken. Don't give the market 4 decision-making points that you're hoping break with a little bit of momentum. Let it be one. That's the easiest, the highest probability way to do it. Make sure that it's from a strong top or bottom. You learned about this in the high probability trend trade. When there is a decision so impactful at a key area that it reverses the market, guys, that's saying something. Let it happen. Make sure that there's strong triggers on both charts, because you're giving up the clear path, right? I don't have a clear path. I sure as heck better have momentum. And guys, then it reminds you that divergence is the loss of momentum, and divergence is one of the biggest reasons you guys lose these trades. Taking the 50-50, whether it's not from a strong top or bottom or whether there's divergence, are the biggest reasons I see losers on that trade, guys. So commit to this super simple approach first, and it reminds you again, no divergence. And it tells you again in management, for the love of fuzzy, divergence is a killer. So guys, if you're trying to take the high probability trend trade and you confuse the entry rules or the management rules with that medium probability trade, it's going to create problems for you. It really will. So what you need to do before you ever go live is you have to know exactly why you're going to enter a trade. Those are your rules for entry. And you have to know precisely why you will exit that trade. And guys, rules, it says should be. Rules better be patterns that have been proven to win more than they lose. If you didn't test them, if you didn't validate them, if you didn't verify them, if you didn't develop some level of trust in them, you're more likely to break your rules. Guys, your exit conditions should be identifying when your advantage is gone if your targets haven't been reached. Your exit conditions are a reflection of your advantages going away, and it makes sense to exit rather than rely on hope. So if I'm in a high probability trend trade, guys, I have to know why I'm going to enter that trade. And I have to know why I'm going to exit. And that KISS plan's perfect in the beginning for you guys. Focus on getting paid. Look at those advantages. Once I add a second trade, I have different entry rules. And if I confuse them, I kill my advantage. And the same is true at management. If I try to manage a high probability trend trade like a 50-50 trade, I'm going to be jumping out way too soon. But if I try to manage a 50-50 trade, Like a high probability trend trade, I may not jump out soon enough. And then, God help us if you guys are taking these momentum trades. These trades where you just jump into the market, where the only thing that you're relying on is momentum, and you don't have a plan for exit. And if you try to manage one of these jump in momentum trades the way you do a high probability trend trade, you're going to give back so much money when these things fail. And you're going to be mad and angsty. So don't do that, guys. Know exactly what it takes to get you in. Know exactly what it takes to get you out. That's where the repetition comes in. That's where you've got to get some work done. I promised you guys I would give you everything that you need to be successful with this software. I just dropped a zip file that says everything you need. You now have rules for the highest probability trend trade that we take. We've broken them down individually. I've given to you them in pictures. I've taught you how to study them. I've given you a spreadsheet so you can go back and study the pictures and annotations that you took. I've given you the KISS plan, the plan that optimizes your chances of success for both the high probability and that medium probability 50-50 trade. I've given you the daily goal sheet that reminds you that you don't have to make $10,000 a day to be a successful trader. I've given you those entry and exit conditions, reminding you that you have to understand these rules, that you need to know where you're getting, where you're getting out. Guys, the one thing that I haven't given you is experience or repetition. And the other thing that I can't give you, well, I'll give it to you all day long. You have to learn to give it to yourself. And this is my wife's favorite word. And it becomes more and more impactful to me as I grow old. Grace. You're brand new. Give yourself some grace. Stop putting the pressure on yourself to be a professional day trader in your first 30 days. Stop putting the pressure on yourself to never take losers. Stop putting the pressure on yourself to know this perfectly in your first week or two, guys. Your first week or two is designed so that you can learn to read your charts, so that you can follow a plan, so that you can have these statistical advantages, and you will grow from it. But the further you deviate from simplicity, the further you get away from the best of the best, the less likely you are to find that success early in your journey. And I say this through 5 years of experience working with day traders, teaching day traders, watching exactly what you guys do. So we learn the rules, simulate, practice, get feedback. You have to know what you're doing right or wrong. And if you don't, let me tell you. And guys, I'll tell you with a big hug. It'll be like your grandmother cooking cookies, right? This is what you did great. Let's celebrate all your victories. Here's where I see your challenge. Let's develop a plan to fix it, guys. And that's my whole purpose in life here. So we're going to come back into the second hour, and we're going to talk about these 3 rules on every chart that you posted. Tell me what you see. One of my biggest burrs under the saddle blanket is when you guys post charts and refuse to tell me what your chart read is. When you guys post charts and don't tell me why you did what you did. Because there's one of 2 things going on. One, you just don't want to do the work. F it, it was a loser. I'm not going to bother. Bleh. Or you're like, oh, it's a winner. Look at me. Did I mention I'm a great dancer? Watch this. I'm going to moonwalk. Guys, this isn't a show off. This is an educational room. So go back to momentum, clear path, and entry on everything that you show me. And no matter what you show me, that's exactly what we're going to talk about. And we're going to do it because this is very much an educational room. And while some of you are light years ahead of my new kids, there's always something to learn, guys. This is my large chart on crude oil. Whoops. Let's do a chart read. Let's pull up the small chart too. Do I have odds favorable momentum on my large chart? What do you think? Give me a Y or an N in the room. Do I have the best trigger line I could ever hope for that says, hey, guess what? The market is likely to continue down. The odds are favorable. You're darn right, guys. Do I have a clear path? Is rule number 2 there? Are my large and small triggers below any problematic area? Or do I potentially have one of those 50-50 looks? One of those potential to break because of the momentum. But it's not broken yet, which means I got to get my management hat on. Do you guys see that? Which one is it? Is it clear path? Is it 50-50? Is it termination? You got to be able to do this quick. It's a 50-50. Perfect. What does that mean? That means that this area isn't broken. It means that this area isn't broken. But there it goes, straight to the next area. Momentum did that. We never even got an opportunity. Guys, this is what you're going to learn how to do. You're going to learn how to read your charts super quick. So you can say, holy smokes, I have momentum. It didn't reach the fib. It pulled right back to a mid band inside of triggers. Holy smokes, that might be a long trade. That was certainly a long trade. That probably was as well. And you're going to be able to do this. And you don't think you can yet. It's a little overwhelming. You will. By the end of the first week, you're going to start to see it. By the end of the second week, you're going to start catching these. And then you're going to learn how to manage them. And then you're going to fire me because you're going to say, Mark, I don't need you anymore. I kept it simple and I'm very focused and I'm reading my charts. And guys, that is my hope for each of you. But my other hope for each of you is get up out of your chair and go walk a lap. That's what I'm going to do. I'll be back in 5 minutes. When I come back, we're going to look at every chart that you guys post. If you have a question, post it. If you have a comment that needs addressing, post it. If you're working on a new trade, post it. If you need help with management, post it. If you take a trade, post it. Guys, the people that post the most make the most. It's pretty much a fact of life. I'll see you in 5 minutes. All right, guys, that's the end of break. So I'm going to scroll up and we're going to look at the 8 pictures that were posted. And everything started with Steve Diego. And I'll tell you what, guys, this is consistency. Same thing every time. Steve, this is a lot of writing. I love the thorough. I'm going to try and get through all of it. And we're just going to go left to right, guys. He started with a strong bottom. He had a termination that reversed the market. He even said there was a second higher divergence, which means that not only was there a loss of momentum lower, there was also a loss of momentum right at a key area. Good 1819 long is what I'm assuming that means. Maybe. I don't know what a 1819 IL is. On 2004 momentum trade, termination on the 34.5 chart, triggers roll, long, okay, 1819 long, which is, okay, up here. There's 08. 18 is all the way up here. 1824, that's okay. You let it hold, you let the triggers roll, and it pulls right back to the small triggers, and that's exactly right. That's the 2004 edge trade, guys. This is a trade that my brother taught clients in 2004. When a Fibonacci area holds on your large chart and the small triggers roll, buy or sell a pullback to the triggers. When a termination on your large chart, small triggers roll, buy a pullback to the triggers. I mean, perfect execution. And you take that trade all the way to Fibonacci resistance, where the market has the potential to stop. Target was the pink 1-to-1s on the 34.5. It's a perfect target. You almost made them to them. And then everything continues up, and let's see what happens. Everything continues up. NFT on pullback. I'm not sure what NFT means. Not for trades. Good Nexgen momentum trades with the area. What's NFT, Steve? Just so I get the verbiage down. But this looks like the perfect trend trade right here. Not favorable triggers. Did I just decipher it? No flinch triggers. I don't know what flinch triggers are. Let me show you this one though. That was momentum and a clear path and a pullback directly to support inside of favorable arch triggers. And Steve, this one may not be in your plan. This one may not be in your plan because you're taking these momentum trades, but that's the perfect momentum trade. And I want you guys to see something. If the momentum trade was taken here, that reversal bar said that it's over, and it turned into a trend trade. Triggers don't pinch. Right on. This is great trading. Beautiful trading. It's momentum and path, guys. Momentum and path. Stay wide open. Okay, I like it because you insist on the best momentum. It's not, Rob, because these are his trades and his plan. So you don't have to know what NFT means. We're talking about momentum and we're talking about path. And those are the two most important things. And this is the basic, right? I could call odds favorable momentum chicken scramble. Doesn't matter. It's important to Steve, not to you, Rob. Nobody has to use the verbiage that I teach. It helps, but it's not mandatory. Why would I lock you in that box? But check out this. Let's look at the second one. Odds favorable momentum. Nothing in the way. Gets in, gets out. Odds favorable momentum and a clear path. And that's what you've got to learn, guys. This is what it looks like, no matter what I call it. If I say I've got chicken soup and monkey butt, if you can't look at somebody's chart and not get hung up on the words, Rob, I read his chart, right? I read his chart. And you can't say that because you don't annotate your charts as often as I'd like you to. So you don't get to play chart annotation police. This is what it means to him. Strong bottom, second higher divergence. This was his trade. This is a characteristic that'll keep him out of a trade. I'm learning his plan as well so that I can offer feedback. Because later, I might go, hey, remember that NFT thing that you talked about, Steve? Is that what it is? And he'll be like, oh, man, you're absolutely right. Thank you for the feedback, Novak. And I'll say, absolutely no problem. It's hard to not be the trade police. But look, odds favorable. He never says clear path, but he had it. And then he gets paid. And it worked beautifully. Odds favorable, gets above trouble, gets in, gets out at trouble. Should have listened to Ron. Does that make sense? So there you go. Flinch means triggers stay wide open on pullback, so momentum is still good. I wouldn't have in a million years guessed that that's what flinch means. To me, flinch means that you close your eyes and pull away from me, and then I hit you twice. 2 for flinching, right? But look at this. Price above, strong triggers, small strong triggers, separated from large triggers. With this momentum and trigger look, price has the potential to get to fibs. He's taken the very basic advantage, and he says this is the potential of that advantage. Let it clear trouble, because trading into areas doesn't work nearly as well as trading from areas. Get out at areas. And then he said, should have listened to Ron. Base hits, not triples when you hit the fibs. Exit both contracts. Was looking for one-to-ones. Took my eye off the ball when price closed below triggers. Momentum gone. Time for my exit. But Steve Diego, what a great way to hold, right? You had a reason to hold. And then when it didn't happen, when your advantage went away, you took an exit. I don't disagree with that at all. Because you identified the potential, you gave it the opportunity to break, and you said, if I close on the wrong side of those triggers, my momentum is gone. I no longer want to be in that trade. This is, Steve, how you hold for bigger moves. This is how you catch the bigger moves. Because if it pulls one of these, right, and it never closes until all the way up here, there's your home run trade. There's your grand slam. The guy that I'm working with, I told him, I was like, when you bump to a 3 lot, take 2 at your target, let 1 run, break even. If it closes on the wrong side of the triggers, get out. Great management. Great management. But guys, these are the things. What did Steve have? Whoops. Steve had broken record time. He had momentum, and he cleared the area, and then he found a way to make money. The first 2 advantages. Great trading, Steve. And we learned a new word today. Do I manage out with a $20 loss or hold out, had momentum, clear path, but pullback hadn't happened when I took the trade? So what kind of trade is it, Rob? And I can't tell you. You took the perfect momentum trade. Rob, this is beautiful. Check it out. Termination, strong triggers, break the area, pull right back to it. This is a momentum trade. And you got paid beautifully. Do you see how easy this one is, Rob? This one is directly into a fib without triggers. There is no pullback. You got in on the loss of momentum. And look at that stop. Using a trend trade stop for a momentum style trade. Does that make sense? This is everything that I sent you this weekend. Does that make sense? That off of there. Rule number 2, guys. This is why annotation is so important. Had momentum and a clear path. Pullback hadn't happened when I took the trade. I jumped in on the wrong side of triggers, which is a loss of momentum. They are. And you know what? If you were going to trade into a termination, Kurt, how much room do you have to your target if the termination holds? If you jump in on top of the line? How much money? If that termination condition holds, you have zero, right? Zero room to the target. If you say, because of all of this momentum and the strong bottom, I'll wait for some sort of confirmation down here at the area inside of favorable large triggers, well, Kurt, then you at least have some room to try and get paid. Dude, terminations have been ruining parties for as long as there's been termination conditions. So I don't care how strong the momentum is. If you trade directly into a line, golly, I've got a lot of stuff open. If you trade directly into a line, look at that. All that momentum directly into a line. All that momentum directly into a line. There's just no room to make money, guys. It's our job to get paid. And Rob, I guess you're not talking to me right now, but if you just jump into the market, you could at least be on the right side of things. That one was easy. This one whipped your butt all the way back. I hope that makes sense. This is why we annotate, though. I can't coach on flinch, right? I don't know flinch, but I can coach on momentum, clear path, and entry. But you can write whatever you want on the chart. I'll always go back to those 3. Maybe a term? Joel? Absolutely a term. On a couple different levels. So first, price reaches a divergence high. The triggers remain below. That's a termination, right? It's one of those pivot stop outs. Do you notice that it's also 3 divergences in the same price range? This is like double whammy super term. All you need now is just a fib right there. But absolutely, it says no more long trades. This said no more long trades. That was also a termination. Great picture. No, you're okay, Steve. You write whatever you want on your charts. I will always go back to momentum, clear path, and entry. No matter what you write. But if I see something, I might ask. I didn't know what it meant. I still want to learn what you guys are doing. But guys, you're never in any obligation to make your personal annotations cater to somebody else's needs. Jeffrey Dean. Is this Jeffrey? Saw price reach the fib. Large triggers didn't break. Set the limit order. So you went short? Okay, so you had odds favorable momentum on a range chart. You had odds favorable momentum on a large chart. You had odds favorable momentum on a small chart. Every chart is trending up. Every chart has momentum. Every chart is coming from a termination condition that stopped the market. And you went short before one down bar even presented itself. Okay, so these are your rules. I want you to write this plan out for me, Jeffrey. So guys, why do I ask you to annotate your charts? Let me create this trading plan. I'll create a checklist. So my first rule is all charts have to be trending up. My second rule is all charts must have odds favorable momentum against my trade. My third rule is I have to jump in at a red line and hope it goes down. How could this not be a pattern that wins more than it loses? Does that make sense? If you fight everything on God's green earth and it goes down for you here, they're training you to break your rules. So let's go look at crude oil real quick. And this is where it went, right? And it did go. But it didn't go from there. So let's see. Check this out. And Jeffrey, what I'm going to do for you here is there's a big difference between has and might, right? It might hold here. Everything's set up. But check it out. When this termination and the small triggers roll, there's your short right here. This one has all the trigger lines in favor of it. This one has all the trigger lines against it. This one goes with the trend. This one fights the trend. And one of the great things, Jeffrey, that we don't have to do is we don't have to be first. Did you go long right here? Because it's the exact same look. Why not? Did you go short right here? Did you go long right here? And I know the answers, but this is kind of one of those things where you got to say, why did I go short right here? Because I'm sick of waiting is usually the answer. Because I'm tired of not being in a trade. Because I can't make money if I'm not in the market. But you have to ask yourself, what scared you out of this one? Why didn't you take that one? What made you feel that wasn't the trade? And even more so, why the hell didn't you go long right here when everything had held for so long? Does that make sense? And you don't have to answer the question, but guys, what we're doing is we're trying to create patterns. We're trading patterns that have been proven to win more than they lose. This is not that pattern. And Jeffrey, even if you had waited for divergence to print off the fib, I could get on board with it. You didn't even let a bar form. That's terrifying to me. That's not long-term success. Did you go long right there at the one-to-ones? And the reason I ask that, Jeffrey, is because what you're going to recognize that there's no consistency in your plan. So this short had to be fueled by something other than rules. And I know that it sucks to hear that. But that's one of the things that you need to hear. You need to hear that couldn't have been rules. Or you would be long. You would have been short, right? And that's okay. I love that you took it, and I love that it won. And I hope that dopamine was rock star. I hope it was great. But check this out. When the termination holds and everything starts to roll, it almost gets easier. It's almost, you're like, oh my gosh. But it's still odds favorable down. There's still not a trade to be had yet. And I go through these things and I point these out because I want you guys to have that longevity. I want you guys to be able to take the best of the best to stick around. Trading in your small account today, strong triggers, rolled down, separated, 50-50 trade. Waited until price got below the one-to-ones. So you tried the momentum trade. It didn't work. It's okay, it happens. And it turned directly into what you wanted it to be, Pete, and it went down. And guys, this is the perfect example. The ideal, the textbook example of why when your momentum trade fails, when you get that close on the wrong side of the triggers, it's okay to just exit. Very often it turns into a trend trade. If the large chart says it's probably going to be a trend trade. Does that make sense? And Pete, you did a great job here. And you got back in, right? I love it. I love the way you did that. The momentum trade failed, so you stopped treating it like it was a hopeful trade. And then it goes straight to the fib, straight to trouble. And look at that exit. And I think it's funny that you've changed, and I love that you've changed it, but I think it's interesting that you've changed your language on getting paid at lines. There used to be one that got stopped out somewhere up here, and now you're just Make money. And guys, I'm going to let you in on a secret. This is for each and every one of you. And if I haven't told you this yet, I apologize. You're going to be so good at this that there will be the next trade. You're going to be so good at this that you're going to get to the point to where you absolutely positively never fear that you're not going to find a way to get into the market. And you'll say to yourself, well, I have weak triggers. I don't have areas inside of my favorable large triggers. I'm going to choose not to just arbitrarily jump in. Do you guys see how that just worked here? Let's take a picture of it and let's just write rules. I love rules. So let's do the chart read, guys. Did we have odds favorable momentum on the large chart at this last push up? Anybody? Am I too preachy for the masses today? The answer is no. The answer is I had weak triggers. And weak triggers mean anything can happen. And this sucks for more up. And that's what I say out loud. Did I have a clear path? I did. I love it. Nothing in the way. And at this point on this chart, before I ever look to the small chart, if you really, honest to goodness, speak to yourself in terms of advantages, what you should be saying is I only have half of my large chart advantages. I'll insist on perfect rules met small chart entry. Does anyone ever do this? The large chart's not perfect. My small chart better be freaking amazing because I'm not giving up 66% of what makes this trade work. And I look at those triggers and my language for entry says area inside the favorable large triggers, or even just triggers, depending. And the answer is no. And 2/3 of my advantages are gone. And you don't have to answer. Some of you took a trade right here. Some of you went long right here. And you said, my stop has to go 4 or 5 ticks below my triggers. And then I hope you said to yourself, damn it, that's above my entry. Maybe there's something to these triggers. Well, I'll just put it 4 or 5 ticks below the fib. And then you got stopped out. Some of you said, well, I'll just wait for a reversal bar from the middle of nowhere. And then I'll put my stop there. I won't even run one. And you lost like $500, $600. And if you jumped in right here, that was your exit. And guys, this is what rules are designed to do. And I'll tell you what, it takes a while to trust them. I don't want you guys to think that I'm sitting here in my glass house just throwing stones. It takes a while to develop trust, guys, and I love coming back to this meeting. It takes a while to rely on the truthfulness or accuracy of this methodology. And the easiest way to develop trust is to see it over and over and over. To see the odds favorable, to see the clear path, to circle the tail. And look how that market pulled right back to support, right at the base of those triggers. And I want you to see a cool progression. This one had favorable large triggers and it went up. The second shot at it wasn't quite perfect. The third shot, they're starting to splay. And the fourth shot failed miserably. And this is another reason that trust comes into play, guys. Because if you second guess your entry and miss the best one, and then you third guess it and miss the second one, by the time you get to the third retracement, guys, all you're seeing is the fight. All you're seeing is the fight between the buyers and the sellers. And what 4 retracements in the same location tells me is that nobody's winning, that the buyers can't push up and the sellers can't push down. And the more you're caught in the middle of that fight, the less likely you become to win. Does it mean that the trend is over forever? No, it just means that it may push lower, and that's exactly what it did. Straight to support with every indicator up, and then it just kept going up. Crude oil. Look at the untradeable bounce right off of a term, and now I've got weak triggers and a clear path. Do I have an area inside of triggers? I do. So I don't have momentum, but I do have a clear path. I do have an area inside of triggers, and check this out. If I choose to take an entry, my stop goes right there. This would be 5 or 6 ticks risk to see if this market continues down. Before you ever get an entry, you know exactly where your stop is. You can gauge your risk. You can decide if it's worth it for you. Is 2/3 of your advantages worth taking this entry? If it is, some of you will take the trade. If it isn't, because weak triggers could push it up. And guys, let me outline the range where these weak triggers may push it up. Somewhere up there is where this has the potential to push up to. Are you willing to get in 2 ticks below a mid-band? Are you willing to put 5 ticks of risk on that trade based on the advantages? And these are the questions that only you can answer. Only you can say, yes, I'm okay with that risk based on this look with the potential to get to my next key area. Or, I don't care for the risk. It's not worth $50 to me. I've studied Nexgen. I've recognized these patterns. I understand momentum. There will be another trade. It's rare that there's ever not a second trade. And that's how that works, guys. And only you can answer those questions. Trading is an individual sport. Trading is just you and your analysis and your rules. That's all it is. Mark, what would you do? It doesn't matter what I do. What would you do? What makes you comfortable? What makes you happy? So we've made it through all of your pictures. So I'm going to go through the lessons that I put up there on Sunday. And guys, this is a management idea for the momentum trade. Let me just put all the pictures up here. This is what I do. I wake up on Sundays and I don't have anything going on. And I think, how can I make class better on Monday? So for you guys that are looking at these chili dog trades, at these momentum trades, guys, when the price bars remain left of the small triggers, you still have your advantage of momentum. That's it. And the market's going to continue in that direction until you get a reversal bar that closes on the wrong side of the triggers. Go back and study it. It continues down. I get a close on the wrong side and it goes up. And then look at that. It closes on the other side, but then it closes on the other side again. You can define chop. And then once it starts going down, it continues down until it closes on the other side. And as it's running up, once it closes on the other side, your advantage is gone. I love this. And guys, you can use this for management on momentum trades. And the idea is that if momentum is the reason for entry, once you believe that this close on the wrong side of the small triggers is a loss of momentum, it becomes a very clear indication that your advantage is over. And I think that's language that we're going to start incorporating into the class. You should hold your trade as long as the advantage is present. But when the advantage goes away, guys, it's okay to take an exit. And I use the exact same wording on a different chart because it's true. It continued up until it closed on the wrong side. The advantage is over. And I did it on another. There's a reason that I copy pasted these. Look at this. If you thought, oh my gosh, there's my exit. And then if it's going back down and everything still says go, get back in. Hold it. And then you get out of the next one. And it takes so much hope out of it. And one of the things that Pete and Steve both do that's brilliant, and I'll use this picture as a picture, is these guys very often have a fib or something right here. And they're like, you know what? I'll get out right here at the fib or a loss of momentum. But once it gets to the other side, it's game on again. Once it gets to the other side, it's go time. And it uses that idea, and I love it. Absolutely love it. And then just trying to put that into play a little bit as well. Here, the market's pushing down, and I'm not saying that this is a trade, guys, but notice that twice you had reversal bars that didn't close on the wrong side of the triggers. Can you guys give me a Y if you see that? 2 times you got reversal bars, but they never made it to the other side, and I'll be darned, that market kept pushing down. And then there's 1, 2, 3 small chart fluctuations that could have scared you out of a momentum trade. And it didn't retrace until that closed below. And I'm telling you, if you guys start to look at this, even if you're like, man, I sure hope this area breaks. I'm planning on this area breaking. This is an area that has the potential to break. And then if it gives you, I think it was this one. If it gives you a loss of momentum at that area, you can exit the trade and not hope that it breaks. Thanks for that one, Steve Diego. All right, and then let me just double check. Okay, so we're going to this one. So guys, you can use the same, oh, look at that. I went into the lesson, I didn't even realize that I was. You can use the same concept if you want to try and hold. So look at this look right here. You're hoping that it breaks, right? Not an entry, but a beautiful exit. And then if you get over here, you take that momentum long, your indicators give you 0 reason to exit until this pullback, until you get a close on the wrong side. Is this making sense, everybody? Hey, Monica T, welcome to the room. New faces. And then I go back into my preachy moment, guys. Understanding what kind of trade you're in lets you know how to manage it. Understanding what your advantages are for that trade lets you identify when those advantages are gone. So if I'm in a trend trade, guys, the idea is different than a momentum trade, right? With momentum and a clear path, my goal is to hit that next target. My great entry gets me in, and my expectation, my plan is I'm going to get to that next key Fibonacci area with all of these advantages. That's what the trend trade tells me, right? So I may see fluctuations on a smaller, faster chart. That smaller, faster chart might give me one of these, but because I'm in that trend trade from the best of the best going down to every advantage, guys, I'm holding for the next area. I don't worry about these fluctuations so much. They don't bug me. They don't scare me. Because my large chart's still saying down, right? And this loss of momentum isn't counterintuitive to the overall trend trade. Good stuff. Wanted to throw that lesson in there. And it's funny because I revisit about once a month, I think. About once a month, I think. And then, Jeffrey, can we do something on yours? So check it out. Let's take the exact same idea. At this area, I like this because this might be, Jeffrey, kind of a cool thing for you. Where you might say, yeah, everything's going up, but I really have this key area. And my chart reading and my indicators say this is an area that really has the potential to hold. And I'm willing to take a low risk shot at it. Does that make sense, Jeffrey? So you say, I'll force it to give me a close on the wrong side of the triggers. And look at that. It keeps you from jumping in here and jumping in here and jumping in here. And you can actually catch it on that reversal bar marker. And then if nothing else, you've taken that loss of momentum at the key area. So you at least have a better shot of not getting absolutely slaughtered. And this is one of those things where you can take maybe a management lesson and work it into a trading plan somewhere. And I'll tell you guys, I have trades where I do go counter. And absolutely, Kurt, you could use a sell stop. I wouldn't because this is freaking financial suicide. But that's an example of how if you're hell-bent on taking this trade, at least give yourself a fighting chance with a reversal bar, right? Guys, if you took the short, that clear path in the mid band, and it came outside of it a little bit, so you wait for that confirmation, or you wait for that close on the other side of the triggers, and it becomes a pretty easy trade. That can buy you some patience too. But everything went down. If you just jumped in, that was your key to exit and wait for the next trade. Is that helpful? I hope it's helpful. I try to be helpful. Guys, crude oil has weak triggers and a clear path down. The S&P has odds favorable and the path is clear, but look at your small chart. Look at the separation. And let's use language. You guys want to use language? Yay! When I get this reversal bar, and this reversal bar, and this reversal bar, and this reversal bar, price could return to these triggers. Price could also return to these triggers. My stops have to go above the triggers where the market shouldn't. How do you guys feel if you use the very basic language? Price may go here or here. These areas aren't inside of triggers. Are you comfortable with that much risk? 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 Or if I wait for a reversal bar, they still get me. Next reversal bar gives me a little winner. Next reversal bar puts me into 3 divergences. Reversal bar from up here gives me a pretty good run. And waiting for the reversal bar here kept me out of trouble. Split triggers, guys. This is why we talk about favorable large triggers so often. Because when they're favorable, it's pretty easy to pinpoint where the market is most likely to continue. When they're not favorable, who knows? Wait for some confirmation, right? Good stuff. What do you guys want to talk about? I don't know what to expect in the market today. I don't know whether people are doing pre-election or if it's going to be chaotic. So we're just looking for patterns, guys. Is there something you're working on that you'd like to talk about? Have you ever stopped and said, what's my thing? What keeps whipping my butt? What do I keep losing at? What's that one pattern when I study my trades that I lose more than I win? I'll tell you right now, I was talking to my brother this morning doing some stuff. And I've identified an area, rule number 2, that tells me until I break above or below this key area, I don't want anything to do with it. And I'll tell you what, the market rattled inside of this key area for a while. And there were trades that looked like longs that you hope would go up, and there were trades that looked like shorts that you hope would go down. And you've got to squash that desire inside of you to be in every move. You've got to squash that desire to try to predict which way it's going to go. And you start saying things. I have to get above here for more up. And I have to get below here for more down. Absolutely no trades in this box. Because that box represents where the fights may happen. And guys, you're at a fight point right now. You had a weak top, which means that it wasn't a termination condition that reversed the market. You hit the mid-band, and the mid-band wasn't a termination condition. 3 divergences in the same price range was. And now we're right back into resistance. All the triggers are below. Guys, when I have a weak top, very often, the market likes to continue up, go for those next fibs. That's why a strong top is one of the precursors to the most successful 50-50 trade. Hey, Tom, you broke away from the office. Good to see you. All right, who are my new kids? I had somebody send me an email over the weekend, told me that the class is too fast for them to keep up with. That's okay. I want those emails, guys. So these are the times. If class moves a little quick for you, and I say, hey, I'm out of pictures, guys, these are where you have the power to slow class down. Morning, all still in the office, just listening in. Love it, Tom. These are the times where we can talk about anything you want to talk about. These are the times where, I've got an hour left. I have an entire hour, and I've talked about everything that I want to talk about. Why not talk about what you want to talk about? You're all in here probably because you need something. Some of you are in here just because you're super good at this, but you like the camaraderie. But most people in here could probably use a little help with something. Why wouldn't you ask? Let me see. Hold on. Greatest hockey player ever. Let's see what the internet says. Wayne Gretzky. All right. Did Wayne Gretzky have a coach? Oh, look at that. He sure did. Not only did he have a coach, he became a coach. It turns out that people that want to get good at stuff get feedback. That's kind of the basis of what we do. Feedback, guys. You got to know what you did right or wrong. I have a coach. I sound everything off John Novak. Before we ever start this room, he and I probably trade 40 to 50 pictures each and every morning, guys. Let me show you this. Each and every morning, we trade pictures. Different charts, different patterns, different reasons, different entries, different exits, different managements. All day, every day, before class, after class, recognizing patterns and seeing if we can find patterns that are giving us advantages. That's why you guys have such a solid plan. All right, I'm gonna go take 5 minutes. Hell, I may take 10 minutes. Nobody's talking. When I come back, the classroom is yours. I will stay muted. Yeah, and that's awesome, Jay. Don't have momentum, don't have a clear path. Nothing to do. Directly into a termination condition with weak triggers, but directly into one-to-ones. Small triggers rolled. Here, we'll put a circle. That would represent your pullback to the small triggers after Fibonacci holds. I'm going to go take a break. Let's see what happens. Talk amongst yourselves. Go stretch your legs. All right, y'all, I'm back. Pete, post coming. Pete says, not odds, favorable momentum, slowing momentum. Anything can happen but a clear path. Tried the momentum trade without momentum, right? Got stopped out. Remember, you're not allowed to be surprised if you try a momentum trade without momentum and it doesn't work. And it turns into the trend trade. And you actually, okay, so the first one off the area didn't work. Second one worked out great. Man, confirmation when it's not perfect. Confirmation. When it's not perfect. Confirmation's not a bad thing. I like it, Pete. A lot of work in that little area. Once again, take profits, get paid, right at terms. Nicely done. And Sid, the chart training whiteboard. Help me out with that. When you say the chart training whiteboard, I'm not entirely sure what you're referring to. And this is just a market flow chart. This is a confirmation chart. This is a chart that when the rules are met on your Renko chart, you can use this for a little confirmation now and then. Show the chart training whiteboard. Sid, can you help me with that on what it is that you're looking for? Are you curious about the white bar trades? Can you guys hear me? Am I talking to myself? Okay, just making sure. I'm sorry, Sid. I don't. You talk to yourself. I talk to myself all day when I trade. All day when I trade, I talk to myself. Guys, you know that your brain listens to you, right? You know that when you tell your brain you have advantages, it believes it, whether it's true or not. When you tell your brain you have disadvantages in front of you, it believes it, whether it's true or not. If you tell your brain that you took the perfect trade, even though you know you didn't, your brain believes that you took it. It's going to try and take it again. Morgan. That's funny. I talk to myself when I trade. But I do it too. Man, when I'm working on stuff, I talk to myself. I talk myself through problems. I think being vocal helps a lot. You threw your plans all out the window when you started this in July because you were jumping in on trades, and now you're starting from the beginning again and following rules and understanding entries better. Jeffrey, now you have the desire to follow rules. Can we be clear about language because words are important? I'm not sure that you're following rules. But that's okay because we'll talk every day, man. We'll talk every day. And these are the trades where you just don't believe yet that the next one's coming. Yeah, that's okay. If I had a nickel for every time I started over, Jeffrey, I wouldn't have to trade because I've started over a lot. Started over a lot. Isn't it weird that it came right back to the small triggers that rolled after Fibonacci held? Isn't that cool? That's a pattern, right? Back to reading the website nightly. Right on. Jeffrey, can I help? Can I offer study advice? Not trading advice, study advice. Stop reading the damn website. Dude, I want you to see this. here's the trading guide. There's that. There's everything here. There's everything here. I know. So the goal of trading, guys, is to get to where you want to be. ASAFP, right? I had someone tell me once, gentleman was on demo, and he goes, Mark, I just need to talk to you for 5 minutes. And I picked up the phone, and I called him, and I said, what's going on? And he goes, I'm going to tell you. This can't work. There's not enough rules. And true story, he said that. He goes, there's no way this can be effective. There's not enough rules. And I love that because that's human nature. Human nature is that I need to know everything about everything. I need to know everything about every line, every move, what news means, everything. But here's the reality, Jeffrey, and everybody else that still has the patience to listen to me today. You need to know 3 things. You need to say to yourself, okay, I either do or do not have momentum. And Jeffrey, this is a lesson that will take you 3 minutes. And it can become as easy as, I do have momentum, I'll look for a long trade. I do have momentum, I'll look for a short trade. Or everything says up, I won't go down. Everything says down, I won't go up. And once you understand momentum, all you have to do is commit to trade with it, not against it. That's going to eliminate a lot of problems. And then you have to learn clear path. And does anyone feel like the momentum lesson should take longer than 5 minutes and then maybe a little bit of study, some pictures? That's the easiest lesson that I do every day, guys. And it never changes. It doesn't matter what chart it's on. But then you have to take it a little next level, and we have to start talking about termination conditions, which means that you really have to embrace the language, because the language tells you whether or not you're there. Price reaches an area, triggers remain above. That's a termination condition at a low. This is always a termination condition at a low. This is without question, hesitation, anything. So all you have to learn for rule number 2 is did price reach an area? Where are my triggers? And it's almost too easy. And then once you have momentum and once you understand termination conditions, you're going to find your entries. And if you look for your entries before you look for advantages, it's very disadvantageous, I think is the best way to put it. So reading everything is great, and that's cool, but I don't need to know what forms a trigger line to understand momentum. I just have to recognize the look, and I don't have to know how all these areas came to be. I just have to know if it's been reached and where my triggers are. And I know it sounds like I'm oversimplifying, but this really is the easiest way to get to where you want to be. And then once you have these advantages, initially we're just defining our area, our entry area. And if you use the language every time, pull back to an area inside of triggers. No, Jeffrey, believe me, I understand that. Believe me, I understand that. I'm the artsiest, fartsiest mofo you will ever meet in your life. I look at wallpaper and get stuck for 10 minutes because I see pictures in it. Like, that's how my brain works. This right here, Jeffrey, was the easiest way for me to overcome that. I'm trying to keep it as basic and simple as possible, and for most of the people that are in my room, this pays the highest results. This is the biggest dividends giver. But we all learn differently, and that's the thing. Everybody learns differently. So while I try to keep it really, really simple, I rely on y'all's pictures to figure out how you learn, right? I rely on your pictures to see what your potentials are, what you tend to do, what you like to do. And Jeffrey, you get bored. You get tired of waiting for trades. And then you make decisions based on your boredom that don't necessarily reflect advantages. I do the same thing, 100%, which is why I take pictures like this when I know I'm in that danger zone, when I know that my brain wants to circumvent my rules, Jeffrey, I snap pictures like it's going out of style. I take pictures of everything that I can possibly get my hands on that says you don't have an advantage, asshole. Stay out of the market, because I know that I get bored and I will take a trade based on boredom. And that's my thing. That's what affects my trading. My bad trading days are results of opinions, not rules. That's where posting in the room pays dividends. I'll figure out what your thing is, and then we'll just talk about it every day. Hey, let's this week, let's try to never fight momentum, right, Jeffrey? Let's take 5 days to never fight the triggers on the large chart. Don't worry about anything else. Take all the trades you see. But the one thing that you are 100% committed to is never fighting momentum. And what happens, Jeffrey, is at the end of that week, you take 30% less losers. And then we say, all right, now that you're not fighting momentum, Jeffrey, let's make sure this next week, right? Because we don't have to be great in the first month. This next week, the only thing I want to focus on is making sure that I don't trade into termination conditions. And I might jack up momentum a couple times, not trading into termination conditions, but what I'm doing is I'm focusing on these individual advantages, and then they become trades. And it's a pretty time tested, right? And guys, it's patterns. Isn't that cool? So Jeffrey, what you learn with a little repetition is that you don't have to be the first one in at the fib. The market fights all the time, and there's a very clear defined pattern that works. Yeah, most people do. Jeffrey, Pete says it. So Pete, I want to give you your credit. Jeffrey, drop it, expand it. Until this one says go, don't even worry about this chart. Until this chart says that you have those advantages, don't even look at the other chart. The other chart is that hot redhead that stole your wallet and ran off with your best friend. But man, she's pretty, and it's easy to get sucked into it. Let the large chart lead the way. She was a blonde. But we all have one, right? But Jeffrey, this is the pattern that says you don't have to be first because it repeats itself. Kind of cool, right? It's almost, I'm telling you guys, it doesn't make sense that something this lucrative can be so minimalized, but it really can. It really, really can. You guys know that I drew that circle 7 minutes before it hit that circle, right? Learn your patterns, learn your advantages. And if the market doesn't get above resistance, if those triggers don't break above resistance, why on earth did you go long right here? Because it looked perfect, didn't it? Pull back, one-to-ones, mid-band, right at those triggers. I can't wait to go long here. But I forgot to look at my large chart. Large chart leads the way. I had a friend tell me that she was going to have t-shirts made or coffee cups or something. Large chart leads the way. Mark, I'm tired of you saying that. Large chart leads the way. But it's true. It does. And guys, I'm committed to getting you where you want to be as long as you work with me. So let's see what happens. Price above large, strong triggers, and small strong triggers. Separated from large triggers with this momentum and trigger look, price has the potential to get to fibs. Got caught up in price closing above the 2016 fib. With open skies above, lost track of open at 9:30. Your buy stop was triggered and you escaped with your life. So you take the entry right at the open and they push down and it turns into a trend trade. Momentum trade dies, turns into the perfect trend trade, and you still get paid. Nicely done, Steve. Great trade. And then it pulls, let's see, that was your long, turned into a trend trade, you get paid, and then you take an exit right at the areas inside of favorable large triggers. This is a great management tool. Great management tool. if you're in a trend trade, manage it like a trend trade. And I know that you were in a break-even position. Oh, that's okay. Guys, you have to blow them every now and then. Let me show you how common it is. Hold on. Where is it? No exits where entry should be. All that means is when everything is right over here, don't put your exit at a mid band inside of favorable large triggers. And guys, you've got to take 3 or 4 of those before you really believe it. I've done it more often than I like because I'm so into managing this trade, I forget that every rule is met for the next trade. And then it goes up and it's no big deal. You still made money, covered your commissions, and then when it gets above trouble, easy peasy. I like that. You held for the runner a little bit, Steve. You said, wait a minute, there's something about price not closing. I'll take one of them, probably go break even, and see if I get to the next one. Great trading, dude. Awesome trading. But what's it all boiled down to? Momentum, nothing in the way. Momentum, nothing in the way. I don't know how many times I can say that. Momentum and nothing in the way. And you'll find a way to make money, guys. Joel. Termination at the 1-to-1s, right? So let it break. Great picture. Termination. I mean, you covered it. What did it do? Oh, it broke. That time it broke. Why? May have had something to do with the strong bottom. It's okay to not take that trade. Let it break. Steve would have said, let it get to the other side and let's take momentum up to the fibs. That's okay, though. Once you had a clear path, it made it to the fib. Great picture. Strong bottom. Strong bottoms sometimes make me want to take chances in my trading. You may get to that point. You may not. I don't know. Guys, tomorrow I have a feeling it's going to be a 101 class, and then maybe not much beyond that with the election going on. I'm not sure. So today's a good day to ask questions. And then Sid, I still want to answer your question. The chart training whiteboard. I want to make sure that you get your answers. I'm just not sure what it means. Is it that one? This is kind of the plan. Termination holds, sell a pullback. If everything's strong, take a trend trade. Next termination, start over. That's pretty much what Nexgen has taught for almost 28 years now. The pick above. But you didn't write anything on it, Sid. I don't know what you're wondering. Did you have a question on the picture somewhere? Or are you just curious about market flow charts? That was 2 questions, but that's okay. Let's do this. I'm going to give you this link, and this will give you an introduction to market flow. But here's the deal on market flow. If all you show me is a market flow chart, I can't help you. I don't know what's going on in the market. So market flow signals define our entry when your entry rules are true. And this is the key, Sid. And there's a million ways to use a market flow chart. So I can't just start rambling about all the different ways that you can use it because this would take days. So initially, what I tell people is one of the easiest ways to use a market flow chart. Where's your picture? is let it be a confirmation chart. If I'm looking for a short trade, make sure I have odds favorable momentum short. If I'm looking for a long trade, make sure that I have odds favorable long. That's the first thing that I do with it. You don't need it yet, Sid. You're still brand new. Are you catching high probability trend trades successfully every day? Are you catching those medium probability trend trades successfully every day? Are you reading your indicators correctly? Are you looking for that next trade? Because the next trade is really what we call, where'd it go? Hold on. Is an HVA trade. And an HVA trade says that when you have a good bottom, a strong bottom, you learn that from high probability trend trades. When none of the triggers go through that area and the market starts up and it hasn't reached a termination condition, there's that line. Where'd it go? Did I accidentally close out? There it is. These HVA lines create potential opportunities. But if you don't understand tops and bottoms, it's a struggle. If you don't have the patience to wait, it's a struggle. It's a great, great, great addition tool. I love the market flow chart. I personally don't really use one, not in what I do. Because what market flow does for new users is it detracts you from having rules met on the Renko chart. I don't think I have one on crude oil. Let me see if I have. Here we go. I'll pull one up real quick, and we'll look at one of these termination conditions and see if there was any information on the market flow chart that might have made us make a decision. Mine's calculating right now. Almost there. So it's cool. It's a neat toy. It's a bells and whistle toy. I'm trying to get mine to load up real quick. It doesn't seem to want to. There we go. So everything starts on the large chart. That doesn't change because you have a market flow chart. I'm still calculating. I'm probably about to crash my NinjaTrader because I'm trying to do too much while it's loading up. So if, for example, right here we had a termination, second chart confirms it, I might go to my market flow chart and say, well, let me see, was there an indication? I think in the beginning, Sid, be able to identify momentum in a clear path. That's it. I tell everybody, before you even find an entry, be able to determine momentum in a clear path. Most of you guys get that done pretty quick. And once you have momentum in a clear path, it's just a matter of finding your entry. Finding that best entry. And then, Sid, what happens is eventually you start looking for trades beyond the basic trades, right? So right now I'm like, oh, look, I had a termination. It reversed the market, but I'm into a termination, right? And there's people that'll go, oh, let me see if market flow gives me an entry. There's no such thing. You're into a termination condition. But when it's a 50-50 trade, you may go to market flow and say, hey, do I have momentum on all three charts? Or if I'm taking a momentum trade, hey, do I have an extra chart's worth of momentum? That's how I use it first. If I'm looking for a trade, I just make sure that I have a third chart that confirms the direction and everything. And then eventually, let me see if I can find an HVA trade for you. 1026. That wasn't it. 952. All right, so, and I'm gonna leave the smaller Renko out, but at 952, yikes! Why is it not spreading? There it is. All right, so I'm going to come to 952. Man, I did it again. I think I'm a day back. Let me not get down by there. There we go. So at 952, we had an awesome termination condition that absolutely none of the triggers break through. And then from that termination condition, on my range chart, Sid, do you see how my small triggers rolled and got to the other side of these large triggers? And this white bar is what we call a breakout bar. And when I get this breakout bar after a termination, there's a lot of people, my brother teaches this trade, on a pullback to the small triggers, this is your first shot to take advantage of that termination condition. But notice that you're fighting trend. Notice that you're fighting momentum. Notice that every background is red and man, it's aggressive. And what happens is people forget that it needs to come from a termination condition and they just start chasing these white bars all over the place. And that's a good example right here at 948. That's not a termination condition. And people that try to let the market flow chart talk them into something, take this short and get beat up because the rules weren't met. So the rules have to be met first. Here they were met, and it was pretty easy. Here they weren't met, but if you chase the white bar, you got stopped out. And this is why I encourage people, and I never tell people don't use it, but I say in the beginning, just get real comfortable being in the moment. Get real comfortable saying, hey, look, I've got the potential to break, and I've got odds favorable momentum. And if I get a pullback, well, I do have areas inside of triggers to try and take advantage of all of this momentum and the potential to break. And once you can do this that fast, you'll begin to see other things. Where's it coming from? It's coming from a strong top. What's my KISS plan say? It says if this divergence prints, if it's true, that's not optimizing my chances of success. So get real in tune with the easy looks. Get real in tune with the higher probabilities. And Sid, you'll just be absolutely floored at what you see beyond that. And I always feel like I'm raining on parades when I say just not yet, not yet. Don't do it yet, right? Why are we giving thumbs down, Em? Why are we thumbs down in people? And the cool thing is, Sid, as soon as you start working on it, all you have to do is post pictures of your trades and we'll walk through every second of it. We'll walk through everything that we can see. Looks like momentum may win again and 1-to-1s break. Weak top, confirmation, 50-50. Wait for pullback to area inside of favorable large triggers. If no divergence, rules are met for a 50-50. I may enter. I love that. Let's take some pictures and talk about what we're looking for. Still don't have divergence. And guys, you'll get to this point where you are locked and loaded on a trade so much faster. Then it's time. There we go. M changed it. You worried me, M. What do you guys want to talk about? That was great. Great question. And the cool thing is the further these triggers move through, guys, the better chance we have of breaking. But we're in the decision-making area. And it's not coincidence that you got your first up bar right at the fib. Do you guys see it? You got your first fight right at the fib. These are where things happen. This is where some people say, you know what? I'm on the other side of the fib. I'll try it with all the momentum. And I'll just put right here. If I get another up bar, I'm out of this trade. But because the smalls broke through, because it pulled back to a fib, because it has the potential to break, because I'm from a strong top, guys, this is a next-gen momentum trade. I do not have a target. If I get another up bar, I probably don't want to be in this trade. So that will be 1, 2. That's it. Super low risk. Does that make sense? Super low risk. Either the momentum pushes it through the potential. I'm trading the potential of this area to break. And there we go. So if I get a close on the wrong side of my triggers, that's a loss of momentum. I'll put my stop right on those triggers, or that reversal bar marker. Look at that. It hit the fib and didn't fill. Ladies and gentlemen, this is the next-gen momentum trade.
Order filled. Order canceled.
Do you guys see it? Momentum, potential to break, snap right back to the area, go short, get out at the area. That was a $300 trade. That was an easy one. But this is why trading into areas creates problem. Trading from areas creates advantages. And notice that I got in on the way back down. Jeffrey, because I didn't have stops or targets. So what I had to do, so if I sell the market right here without stops or targets, I have to right click above it and put buy stop market so that I have a stop in place. And then I have to click below it and I have to put buy limit so I have a target in place. So I've got a buy stop and a buy limit. I'm in a sell position. And if it hits my target, it takes me out. But because I put it in manually, I have to cancel out the other side of the trade. Mr. Mom. Got my whoopee. But Jeffrey, did you see how easy that was when you trade with momentum and nothing in the way? Pretty awesome, right? This is the only thing I want you guys to really take away from this class and believe, is that with momentum and nothing in the way, it's hard to stop that market. I love that trade. Let me see. And I'm not just the president. I want to say I took that momentum trade this morning, the same look. No, that wasn't it. I go through a lot of pictures. There we go. That was my trade this morning, guys. Momentum, potential to break, snap back, get in, giddy up. Steve Diego, you taught me how to not exit too soon on these. I never lost momentum. I got out at a key area. I was like, holy crap. That's a $550 long. That's awesome, Jeffrey. But that's the exact same look, trading from areas. Those one-to-ones printed after I'd already entered, but that's all we're doing. And now I don't have odds favorable momentum. Perhaps I shouldn't be looking for a momentum trade. But you see how I could have held that first one all the way down if I didn't want to get paid at the area? That's my first close on the wrong side of the triggers. These are the little lessons that you'll hear every day, and one day you'll just start applying them and you'll be like, holy smokes, look what I did. Look what I did. Kind of a big deal. Children will sing songs about me. we talking about, guys? Momentum for the win. It's still going. And it went right from the circle that you guys drew. When everyone in this room said, hey, Mark, I remember this from 2004. When a Fibonacci area stops the market and none of the triggers break through, and the small triggers roll, very often the market pulls back to those small triggers. And sure enough, it did. Ooh, Sid, let's build a market flow chart and see if that was one of our HVA trades. Hold on, let me build a chart. Building a chart right now. Let's see where that circle lined up. Look at that, right to that green HVA line. So Sid, this is one way that you'll be able to use the market flow chart eventually. When you have the termination, when the triggers roll, pulls right back, get in with that reversal bar and run that mofo up. That was pretty awesome. You'll learn it. You'll get there.